Welcome back to Bitcoin Treasuries. I'm here with Alan. Alan, how are you today?
I'm doing great, Tim. Thank you so much for having me on your show. I listened for the last 2 days to your guests who had their own interactions with the fiat system, Bitcoin, MicroStrategy, and I found them very interesting. And hopefully, I could add something to that conversation.
Absolutely. Do you want to start with a little bit of your background and how you made your way to Las Vegas? I see in your profile that you also mentioned the Bronx here in New York. So, very intrigued to hear that story.
Yeah, well, a couple of weeks ago, I heard Mason when he was mentioning the show we were going to do. He said, "Wow, I'm 22 and Alan's 82," and he had an exuberance about having the conversation, which I shared. And when I thought about it, that was over 50 years of me watching this fiat currency shit show, basically, that we've all been commenting on. And I had a few different perspectives. But I'd like to say that my early days, I went to the London School of Economics and got a master's degree. And that and your MicroStrategy True North bookended 50 years of watching and in some ways being peripherally related to the subjects we've been talking about. I grew up in the Bronx and I went to City College of New York because that was all we could afford. And most New York working class families, the city colleges in New York were great institutions. And a professor invited me to the London School of Economics. And I had lived in New York and jazz clubs, Latin music clubs. The city was so vibrant, I didn't know what to expect in London. And when I got there, it was even more so than New York. And the London School of Economics, and particularly in the graduate program, was sort of a bubble of lounges, faculty lounges that you would see in old movies of people sitting in leather and wooden chairs and tables. And there were people like Milton Friedman who would be a regular visitor there, and other people of such great intellectual integrity that I was really impressed with it. And my own my own professor, we all had mentors there, and mine was a man named Peter Bauer, who was not only from the Austrian School of Economics, but he was Austrian with the accent which enhanced the gravity of anything he had to say. And there were two events that overhung all of the discussions that went on about monetary economics. And one was when I got there, I was unaware of the war that had ended 50 years before that we were so unaware of to this day, World War One, which had such incredible devastation and loss of life. Whole villages in England and Scotland and Ireland, France, Russia, every combatant country lost millions of people. And it was a war that was fought by kings and emperors who were all inbred, ugly looking men, filled chests filled with medals. And the war went on, creating more and more devastation. And I was particularly struck when I read the Bitcoin Standard, and Safidian Amos mentioned, not just mentioned, but he discussed, and it brought back to life how that war wouldn't have been able to be continued with the absolute destructiveness if the countries had stayed on the gold standard. And they got off the gold standard just to be able to continue the war. In fact, when I was looking up this point the other day, I noticed that it said when I looked up the gold standard in England, that they got off the gold standard because it hampered the continuation of the war. And I thought that was a particular bit of gaslighting, hampering this destruction by being on the gold standard was sort of, it bothered me. It sort of felt like a 25-hour speed limit sign in a school zone hampers someone from going through it at 100 miles an hour. The wording was a gaslighting that we find throughout our mass media, so to speak. And again, Professor Amos brilliantly outlined how that couldn't have happened. The war would have been of much shorter duration if people had paid for it. And at the same time, there was another war going on while I was there, and that was the Vietnam War, of which I was one of the protesters, of which many people were, and actively opposed to it. And the conversation that went on was how does the United States keep up this guns and butter program, as it was called? They couldn't tax people for prosecuting this unpopular war. So basically, they just had inflation by deception, really. And it was just a matter of time before the U.S. got off the gold standard. And one of the amusing parts of being in that program and being in those faculty lounges was that booze was being served, which was something unheard of in City College. And actually it was much better booze than we were drinking in the Bronx before I left. This was really upscale. And the joke was, well, you can get a nice buzz on while you're discussing obstacles to economic growth in Pakistan or whatever. And then when I cut to 50 years later, there is Jeff holding up a bottle of booze and getting his buzz on while he's chairing or calling this convo to order. And it brought me back to those days with great joy. But in between those bookends, and I also have to add what impressed me about the conversations about Bitcoin and specifically MicroStrategy was the intellectual honesty and the peer review, which was the same at the London School of Economics. It was instant peer review. When someone would discuss a study or what have you, or their views, it would immediately be challenged in a very congenial kind of way. And that's what I found to be the case with True North. And the other discussions was that it was honest discussion. And I say that because everything that happened between those bookends was gaslighting and fraud and, in my view, RICO Act worthy white-collar crime by the banking system. And I watched it from afar. I wound up leaving the academia because the life, the counterculture that was growing in England, Bob Marley and the Wailers and the Rolling Stones, and you could add the Grateful Dead, and for us from the Bronx, Tito Puente and Willie Colon, all of that drew me away from academia. And I returned to New York and got into the film business and was working in New York City as a film editor, largely in sports. And I watched the U.S. go off the gold standard, in 1971, and had been following the progress of that because the war was still raging on. And when the U.S. went off, and I remember Richard Nixon acting as if it was a surprise that this was something that just came upon people, that this had to be done, when in fact that sort of everything has to be done in this moment characterized so much that happened over the next 50 years in the banking system. And it sort of reminds me now of current day when scammers would call on the phone and want you to do something instantaneously. So it wasn't that surprising that that was the way it was approached in 1971. I didn't have a lot of people to talk to about that, but it affected me. I knew that this was the clock ticking throughout history. When a country becomes a fiat currency, it has whatever 40, 50 years to until its expiration date. And this would be no exception. And there was really no one. The funny part was there was no one to talk about. It wasn't like going into a bar of that era and starting a chat with, what do you think about the US going off the gold standard? But I followed it very closely at the time. And almost a couple of years later, we also talked about the petrodollar. And the petrodollar was established basically to shore up the US currency, the now fiat currency. And we all know the story about that. But one of the outcomes of that was that every country had to hold US dollars, which made US dollars more valuable in terms of their own country, so their own currency. So they had to they wound up manufacturing. It was very beneficial to those countries in terms of manufacturing. So our manufacturing base was lost. And when that happened, it was presented as another, oh, gee, we never knew this was going to happen. And it's caused by globalization was the term they used, not anything having to do with a petrodollar and the US going off the gold standard. In fact, there was an economist whose name was Robert Triffin, who in the 50s won a Nobel Prize just for outlining that interaction of a reserve currency losing its manufacturing base, but yet it was still presented as something, gee, we never knew that globalization was going to happen to this extent. And all of this really colored the next 50 years of this shit show fiat currency. But should I stop talking?
You're doing great. Go ahead and have some water. I actually have a question for you.
Shoot.
Hey guys, this episode is brought to you by OnRamp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault, guarded by 3 independent, institutional-grade custodians, none of which have unilateral control. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the OnRamp team. Go to www.onrampbitcoin.com. So when the US went off the gold standard, what was the reaction as you were going about your life? Were people shocked, or did people barely notice, or was it something in the middle, almost like Bitcoin for the last, decade and a half, where like a few people would talk about it, but largely not?
The last, definitely. I was living at that point in a world of counterculture. I was in the film business. It was all very unacademic. The music business, very few people discussed it. A matter of fact, I can't even think of anyone who I discussed it with at that point, or the ramifications. I don't think anybody I knew at the time was thinking that there was a 40 or 50-year expiration date on the dollar they were saving. And that definitely is the case. I'm sure if I had remained in, oh, by the way, when I was in academia, I was offered a job in Canada as a lecturer and as an associate professor in Adelaide, Australia. But the street and the counterculture really called to me, and I never regretted getting away from that area of academia, which I'll get to, but had changed so much that it was a real shock to me when the 2008 credit crisis, as they call it, another bit of RICO Act-worthy fraud occurred. But I wanted to mention something about after the petrodollar was established, there was a huge flood of money into the United States, money center banks, as they were called then, because there was windfall profits in the Middle East. And this is never really, this really led to the what I would call the ecosystem of, we're always talking about the crypto ecosystem, but there was an ecosystem of predatory bank fraud also. And it was fueled by the petrodollar, but it was also fueled by all these money center banks had lots of cash and they didn't know what to do with it. So they invented loaning it to governments, all military dictatorships, incidentally, in Peru and Argentina, Chile, Paraguay, Uruguay, Brazil, Indonesia. The list went on and on. They loaned these countries billions of dollars of money coming in from the Middle East. And it was really money laundering in plain sight, because the money was going to the government and coming back to the same banks into the private accounts of the military dictatorships of the country. The end result of that was, of course, the countries were going to go bankrupt, which happened. Again, it was acted as if it was a surprise. And I think about 1982, Mexico defaulted, and then all the other countries defaulted. And at the same time, there was a savings and loan crisis totally manipulated by the banks. And the result of that were two of the massive bank bailouts at the same time in the 1980s. And the way it was resolved was, of course, there was a lot of talk of the banks were too big to fail. And I believe that was when that expression first entered popular language or in the media. And it was taken for granted. Of course, it took a lot of work for the banks to get the public to say, well, we're just too big to fail. And after all, whoever thought that Argentina was going to default on their loan, or Chile? So the U.S. government bailed banks out for both of those fraudulent conspiracies. And in 1991, they had I think it was called the Resolution Trust when Clinton became president. And they basically settled these bailouts. But what I found interesting was that if I jump now to the early 2000s, I was watching a new fraud, and by this point, it was totally in the open, and this was the fraud of the mortgage securitization fraud. And I remember, I should add something else. In the about 1979, I started work at Paramount Pictures as an editor. I was there for about 12 or 13 years. And I watched, and we could talk about that. I watched the industry, the editing specifically, the editing room changed from analog, where you would actually cut pieces of film. All the great movies that we had seen cut on film with razor blades and scissors and antiquated machinery, sort of coming into the digital world. And there were two groups of people which are very reminiscent of the Bitcoin conversation about older people and younger people, because the older people, men and women who had won Academy Awards or were nominated for them or had great respect in the industry, were looking at this new technology and were frightened by it. They couldn't get it. A lot of people just retired, and the others were forced to do it. Unlike later on, older people were not forced to buy Bitcoin. We could get to that perhaps, but at the same time, someone asked me to do a radio show, bilingual Afro-Cuban radio show that was very popular in Los Angeles. And my intention was to do it for just 6 months. But as I got involved in the show, I was aware of how extraordinary the contact was with the audience who called in. It was a live show. And that these people, this technology, radio, was such an extraordinary part of their life. And it made me wonder how did that all begin? How did that technology become so pervasive? And I wrote a book in a novel taking place in New York and Boston and Scotland during World War I. And one of the themes was the early days of radio. And I think that's a perfect analogy to the Bitcoin conversation about adoption, like who was impeding adoption, and what was how did the government stifle it? And briefly, the story, which may be of interest, well, I'll tell it anyway. When the Titanic went down, all these ships came to save passengers, and that was only because they had a wireless telegraphy system, Morse code basically, without wires. And people said, well, how could we get the voice to transmit without wires? And a few technological changes, and the possibilities were there. And the early inventors, the early developers of it were stymied by newspapers. There were 10,000 newspapers in America, and the newspapers derided this new technology because they saw that they would be losing their customer base. And they also said, well, let's get this right. You buy a transmitter and you transmit something and people get it for free in their home. All they need is a receiver. And how do you monetize that? Well, of course, the local movie theater said, well, I'll give you $1 if you mention the movie that's playing to the transmitter technician. And of course, advertising took off from there. But what made it interesting was that there were these FUD, we'll call it FUD, out there for radio. And as soon as World War I started, the U.S. had a problem. The inner cities at the time were German and Irish, largely, both against fighting in the war in Europe for their own reasons. And so the United States had to centralize their pro-war message. And so they shut down radio. 1 week after the U.S. entered the war, an executive order, much like the executive order we often talk about with gold in 1933, they shut down radio overnight. Every transmitter was shut down so that they could put out in the newspaper their centralized view. And they even censored the newspapers, because at that point newspapers would send their newspapers through the mail system, and they needed a special license, which was always in jeopardy of being revoked and shutting down that aspect. So I always found radio to be an extraordinary technology to look at in terms of our ongoing discussion of Bitcoin adoption.
Do you see similarities between what you were just speaking of with radio, with what we're seeing now with social media and with X and with Elon saying that anyone that basically wants to use the platform, that they are the media now? I mean, is this just kind of the latest iteration, or how do you think about that?
Well, I think that was what the government at the time really feared, that there would be an anti-war message on all these stations that were just popping up all over the country, experimental stations. There was one that I wrote about in Tufts College, one of the earliest ones, and the government feared exactly what you were discussing, a social media, so to speak, of wireless audio transmission, which became the term radio came out of that. And so they just shut everything down. And I'm sure that if they didn't shut it down, there would have been a very strong anti-war message throughout every community in America, which was there anyway, which was there despite the government intervention. Wow, 50 years. I have to remind myself that there were many signposts over that time. I thought I would have to resort to some notes, which I have written here, but so far I'm on a roll. I hope not too much of one.
This is great. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Do you want to take us through the rest of the 80s and 90s, early 2000s, and into your discovery or recognition of Bitcoin?
Sure. If I jump from that 1991 settlement, and by the way, of course, billions of dollars were lost in the Resolution Trust, whatever it was called, basically settling those two massive bailouts to the banking system. And what was going on then, which I didn't see, and I can't recall if other people were flagging it, was all this money flooding into the banking system really was a source of extraordinary corruption, of changing even the economic tone of, or the academic tone of the economics profession. And to answer your question, I could jump to about 2004 or 2005. I had a home in Woodland Hills, not far from where this awful destruction is taking place now. And I went to, I think, get a mortgage refinance or whatever. And oh no, I'm sorry, I got it on one of my audience called, and I was discussing it with him that he did that kind of work. And I met him, and he opened me up to the ongoing fraud was that they were giving mortgages to anybody. They had a low interest rate at the beginning. I forget what they called them. We all know the name. It'll come back to me. And then the interest rate was going to go up. So everybody was buying homes with this, but the mortgage lenders, and I must say the real culprits at that time, which is not often mentioned, is the rating agencies. The people at the low end, such as this man who was offering and signing anybody up to mortgages, they would package them into any number of home mortgages and sell it as a AAA instrument. Like 100 shit mortgages make a AAA arrangement. But that was the fraud that was going on, and it was happening in plain sight. And it was clear that this was going to end badly. And the reason why I'm mentioning that is because the government agencies that oversaw this, Freddie Mac, Fannie Mae, all of these agencies were deeply involved in this hugely dishonest money-making venture. And about 2005, well, I had a personal tragedy. My young wife at the time, she passed away. And a year and a half later, I moved to Thailand, where I spent 2 years there and 2 years in Bali. I luckily had produced in the early 2000s 2 CDs, Afro-Cuban music CDs, which much to my shock, one of them got 2 Grammy nominations, which I would have never thought possible. And I was able to sell license music cues to movies and TV shows because I had so many contacts in that industry. And that gave me a nice income at the time. And I took off and sold my house knowing that this shit show was going to come to an end sooner or later. And when I went to Thailand, and I wound up at the Foreign Press Club in Bangkok, which was where CNN and BBC did their on-camera stuff from as well. And everybody was watching this unfold with great amusement because it was so obvious what was going to happen and how it was going to unfold. And at one point, when it started to unfold with all the bank drama that happened, I started to write about it. Actually, I started to write for Seeking Alpha from afar at how dishonest this all is. And the Bush administration at the time said, well, we're ideologically opposed to bank bailouts. And my attitude was there's never been a bank bailout that any Republican or any Democrat ever voted against. And it's probably the only effort that is totally bipartisan in Washington for the past 50 years was signing on to another bank bailout. And sure enough, when I was in Bali, the shit really hit the fan. And I remember being particularly enraged at the rating agencies who were just quietly signing off on AAA bonds, which AAA instruments, which allowed every pension fund in the world, the Copenhagen firemen, whoever, to buy these deadly instruments. And I met a friend. I met someone in Bali who had been recently let off. He was a vice president at Morgan Stanley in Tokyo. And we became friends, and I had someone to talk to about this. And at one point, I wrote an article. Actually, the Treasury Secretary at the time, Henry Paulson, made a dramatic Friday night speech to a joint session of Congress. And he said, this is an emergency, and we have to, of course, we have to sign off on this this bank bailout of $800 billion, which now is chump change, but then was considerable, a lot of money. And he said, to my shock, we have to do this over the weekend before the Chinese stock market opens on Sunday. And my attitude was, who gives a damn about the Chinese stock market? You're taking my money from me to give to these bank frauds. But he presented it as if this is an emergency we just found out about when people were writing about it. And even Satoshi wrote about it a year later, or around that time as well, and so many other people. It was fraud in plain view, and I viewed that as a RICO Act worthy endeavor that everybody from rating agencies to regulators, government officials, every bank was involved in it. And my friend teased me. At one point I said, I wonder how many people signed off on this 2008 bailout who signed off on the 1991 resolution that basically ended, that put to rest the other bank bailouts. And when I actually counted them up, and it was over 25% of the people who signed off on in 2008 were the same people. And I said, didn't they learn anything in those 18 years? They just signed off on another huge bank bailout, which was going to give even more money into the banking system, which could be spread out to lobbyists and to every government official, and create and even make this ecosystem of this predatory banking ecosystem even more intense. And I do, when I'm thinking about it, my friend in Bali, he said, so let me get this right. You're scuba diving, you're running on the beach, you're going out to hear music at night, and then you're counting up how many congressmen signed off on this bailout that signed off in 1991. Like, don't you have anything else to do? It was a joke between us. But when I asked him, this was very memorable to me. I said to him, I don't get it. Why did the three rating agencies, Standard & Poor's, Moody's, Fitch, why did they sign off on these instruments that were going to be so deadly in the portfolio of pension funds and the nurses' pension fund, whatever? And he looked at me and he said, titty bars. And I said, well, what do you mean? And he said, well, when he was in Tokyo, when the rating agencies would come to Tokyo to consult about new mortgage packages, they would just take them to titty bars and get them drunk and whatever else. And the next day they would sign off on it. It was as blatant and as transparent as anything could possibly be. And when I came back to the United States, I was on my way to move to South America, but wound up here for a number of reasons. I saw the devastation in Las Vegas, which was particularly hard hit by the mortgage crisis. There was homes that people walked away from by the thousands, I'm sure throughout the rest of the country. And it was then that I got into a poker discussion group, which was a very high level discussion group, way above my poker experience, much like True North is with Microstrategy. These were men and women who were gamblers and professional gamblers, professional poker players. It was great fun. And the US stopped online gambling in 2011. And someone said, well, if you want to gamble, if you want to play poker, there's a European site, but you have to buy something called Bitcoin. I said, Bitcoin, what the hell is that? And I said, how do you do that? And they said, well, there's a new company. It's called Coinbase. And you can buy some Bitcoin and forward it to the platform, the poker platform, and you're in. So I did that. I opened an account at this new company, Coinbase, and I did some research into it. What is this? And what I came up with at the time was, well, this is a nice drawing board experiment of some kind of new money to take away the possibility of this ongoing fraud that is only getting worse. But there's really no chance of it. These guys are really smart guys who are discussing this. And so I let it go. And by the way, I lost the 70 of the $100. I got discouraged because I got tired of getting beaten by 15-year-old guys playing poker online. So I left $30 in the account, and then it went bankrupt, and they sent out forms. If you want your money back, fill out the form, but I never did. So I don't know what that $30 would be worth today. And in 1917, around that time, I remember just vaguely looking at the price as 17,000. No, it's 3,000. No, it's 17,000. And I saw a few articles, and one of them, the substance of it was Bitcoin and smart contracts are solutions looking for a problem. That was basically the theme of the article. And so that sort of concurred with my view of Bitcoin. It was sort of something that some really smart people were involved in, and my attention was in other directions. And then I remember in 1920, I'm not that old, in 2020, I came across a YouTube video with a woman, and I had to look up her name recently, Ria Batoria. And she worked at Fidelity Digital Assets, and she was discussing why Bitcoin was not any of the negative, had none of the negative attributes, the FUD that were being ascribed to it. She went through the usual stuff, criminality and energy and all of that. And I said, wow, this makes sense. But what really affected me was that she was from Fidelity Digital Assets. And I said, wait, Fidelity Digital Assets, they're involved in this? It's not just these people putting up Blackboard examples of it, or whiteboard now, examples of it. This must be something to this. And I took it to heart. And who do I come across next? A guy named Michael Saylor, who is saying, well, I was against this in, of all years, 2017. And and he was going through his change of heart. And Lynn Alden. And I came across both of them who had major shifts in their attitude towards Bitcoin. And I said, wow, these are people, and I saw them immediately as being people of great substance. These were not shills in any way, which I had watched happen in the banking system over the past 50 years, literally. And so I went out and bought Bitcoin, and I read the Bitcoin Standard, as we all have it, and recognized it as one of the great economic works of this century for sure, and maybe for a long time. Let's put it that way. It struck me in so many different ways. And I bought Bitcoin, and I remember Michael Saylor said, once you went down the rabbit hole, the biggest fear was that you couldn't buy enough of it because someone else was going to buy it. And I had the feeling that that was the same way people felt about all the other great technologies that so many of us passed up, like Amazon and Microsoft and Google and all of these companies. And I bought it understanding that this had the greatest asymmetric investment, or bet, as you might want to say, because the downside was, and I think it was about 20,000, 21,000, somewhere in there, downside, when an astronomical upside. At that point, people were talking about, could this ever get to 100,000, which would have been a 5x. And I said, well, that's an extraordinary asymmetric bet. And I bought some, but I wanted to take a few people along with me. So I wound up trying to get a few people involved in it, which is a whole other adventure. But what I did was I actually bought them Bitcoin. And I'm talking about people that are really close to me, people who already have access to whatever I have. the young ones in my family. And yes, the young ones were more on board than the older ones. But what really got them all was the self-custody aspect of it. So I bought them ledger wallets at the time, each one of them, and said, this is how we do it. And to my surprise, almost regardless of the age, the idea of actually manipulating the wallet was difficult. And this was people of different ages and of different education backgrounds and what have you. And my attitude was, no, all you're doing is you're transferring an email address. Think of this long string of things. You're sending this to that and that to that, and that's it. You send email all day. And I mean, I got your email and you got mine and what have you. And they never to this day overcame that. So when the ETFs came out, each and every one of them bought into the ETFs. And I'm going to stop talking for a minute.
What is your view on holding Bitcoin versus holding MicroStrategy or any other Bitcoin equity?
Well, it's interesting you asked that, because soon after I got on went down the Bitcoin rabbit hole, I saw all of these proxies, MicroStrategy, the miners, Riot, Mara, the usual suspects. And I was involved at that point for at least 5 or 6 years in option trading, and on the same platform that Soleil refers to, Tasty Trade, and used their guide rails often. But I bought into all of those and traded options on them, not just the covered calls, which are discussed by either buying leaps or selling covered calls, but also other strategies that worked with high vol underlyings like strangles and credit spreads and what have you. And I had no emotional attachment to MicroStrategy or all of the others, except I understood that Michael Saylor was a bit different than anyone else. He was overly impressive to me. And he was buying Bitcoin. And my first reaction to this was, so he's buying Bitcoin in far bigger numbers than me, for sure. But he's not going to just be stacking them and holding them in a wallet. He's got to be doing something with this. And I said, well, I see he has a business intelligence company in MicroStrategy. It was a large part of the business at the time. Somehow he's going to involve Bitcoin into that, was my initial insight into it. And I said, but so I was open to the negativity that came of like, oh, the MNAV negativity of why buy MicroStrategy for 2 or 3 times the value, the drill, we all know it who are listening to it. And that made some sense to me. And it sort of made me a weak holder of it. And I'm sure I sold in 2021, 2022, 2023. And I know I did in 2024, covered calls on it, as well as strangles, which don't necessitate having the underlying, and maybe got knocked out of some of them, maybe got exercised, closed them generally way before expiration. But then I might, when it went down, buy some, but I had no real emotional attachment to it. And then I even was open to ETFs are coming. Who needs MicroStrategy? That was another negative outlook that came up. And I was sort of open to that one as well, and was shaky around the time of the ETFs. And soon after that, I found the people who on True North and yourself and a bunch of other people who were talking very insightfully about, no, that's not the game plan. The game plan is the game plan is we're going to do ATM sales. We're doing all these loan different collateralized loans, and I forget the word. We all know it. What all the debt that we're selling in all these. And I said, wow, this makes sense. And I think the tipping point for me was when Michael Saylor made the metaphor of an oil refinery.
Mm. Mm-hmm.
And I said, oh my God, right. And I mean, we all driven by oil refineries late at night, lights on, and thick tubing going horizontally and vertically into stations and fuel and tanks. And the way he verbalized it was, we have the best asset coming in. And we're dividing it into all these products, just like an oil refinery sells jet fuel and the fuel that I pump and you pump at the gas station and petroleum. And then they take that money and they buy the commodity oil again with it. And just that vision of the oil refinery, it was so majestic and so simple. And yes, of course, this is the best commodity of the the best technology of our lifetimes, and certainly this guy and the people around him are going to make this into an oil refinery none have ever seen before.
We just have a few minutes left. Do you have any closing thoughts, and where can people find you on the technology known as the World Wide Web?
Well, I'm mostly I'm on Facebook because I love the music and baseball and boxing sites, and communicate with friends there. And on Twitter, I never really got involved in Twitter because until I was publicizing a book I wrote about organized crime in 2020, around 2021. But my name, Alan Geik, Alangeik. I have nothing to sell. I don't look for likes or engagement. I'm mostly a lurker on sites like yours, the great work you people do. But I do want to add something, if I just have 2 minutes. You had a guest on the other day who said something that was very profound. And he was an artist and a cop in a cowboy town. And he said that Bitcoin was like getting a royal flush. And that resonated with me. And I said, yes, that's getting the royal flush, but monetizing it at a card table is the big deal. You can have the royal flush, but nobody's playing with you and it goes to naught. But MicroStrategy is the monetizing of the royal flush. You have the royal flush in your hand, you have it in you bought, but now you're monetizing it with, and you're getting people into the game, and you're getting the yield from it. And I do want to close with, when I worked at Wide World of Sports for a number of years in the editing room, I saw I worked in Howard Cosell's editing room for a couple of days, and I was looking at a piece that he did with Muhammad Ali. And he said to Muhammad Ali, "Are you really the greatest?" Which he asked him many times. And Muhammad Ali said, "We're all amateurs and then we die." And that was so profound to me. And it disappeared overnight. And I found out the producers didn't want, they had so much invested in the greatest, they didn't want this brilliant insight that, so I'm sharing that with you and your audience. We're all amateurs and then we die. And I never had a chance to say it in public, so I'm doing it now. Thank you.
Thank you, Alan, and look forward to doing this again with Mason when he has the opportunity to join us sometime here in the future.
I'd love to hear his attitude and views of all this amazing technology.
Thank you so much.
Thank you. Thank you.